Man, what's good, YouTube? It's your boy Money Mayor here, and I'm back here with another fire video for you guys, man. It's been a minute since I posted on YouTube, so I had to come back with some heat. And in today's video, I'm just going to be giving you guys a chart breakdown on how I was able to sit here and catch a total profit of $1,250 trading the GBP/JPY, of course. So yeah, that's the video for today. Before I say and continue on to the rest of this video though, make sure you guys go ahead and hit that like button right now. If you're not subscribed, go hit that subscribe button right now. Don't worry, I'm gonna give y'all time to go ahead and do that. Go ahead and do what y'all gotta do right now. We got time. Alright, thank you. Let's get on to the breakdown, right? Okay, so to start this chart breakdown, we're going to start doing some top-down analysis. Top-down analysis is used when you want to sit here and better understand the overall story of whatever pair you're trading. So to start my top-down analysis, I'm starting on the 4-hour time frame, and you can see here I have my 4-hour resistance labeled here in orange, and I have 4-hour support labeled in orange as well. So from our resistance here, we made an impulse down to the downside. If I use my Fibonacci tool here and extend it from the high, and I'm going to go to the support right here, you see that this support ended up respecting the 23.6%. 23.6% is a continuation type of Fibonacci retracement, and in this case is where we sit here and extend our Fibonacci to our new low point. From our new low point, we see that the 4-hour time frame started showing some type of buyer's exhaustion around this 50% level here. But it didn't really exactly close at the 50%, so it's not like it's completely respecting this price reversal zone. Me seeing that, I'm like, okay, maybe price is going to sit there, come up to 50%, but price sits there and ends up finding a type of support around this area here, where you can clearly see price ended up showing some seller's exhaustion towards the bottom. If you can't tell where exhaustion is being shown, just look at the black lines. Black lines on my chart are just, the wicks of candles. And this just shows where price was in the past, but it didn't completely close at that current price it was below at. Like in this 4-hour candle here, price was at one point all the way up there, and it was at one point all the way down here, but it ended up closing as a doji type of pattern, or a doji type of candle. So that's exhaustion for you guys that don't know, and I'm seeing seller's exhaustion at this form of support that we found around this area, right? So as the 4-hour is sitting here trying to determine if it wants to stay or continue bearish on this point, it forms another lower high point around this area here, which lets me know that sellers are getting stronger around this point. And it allows me to sit here and draw the type of counter trend line, which is used to sit here and track bearish pressure. In this case, it's actually a trend line since price is actually bearish. So it actually is a trend line, sorry. But at the end of the day, it's just a trend line, and it allows me to sit here and track this bearish pressure. So on this day here, September 28th, and we are still at this support on the 4-hour time frame. And as soon as the New York session opened on September 28th, which is at 9 a.m., we have a type of bullish, this strong bullish volume right here, which breaks out this kind of trend line, and it forms a type of bullish type of pattern, which is called a double bottom. This type of double bottom looks like this, just in raw price, or just in basic terms like this. Like that, you can kind of see that pattern right there within actual price. And double bottoms are just basically a bullish type of variation where price is trying to sit here and reach new highs. It's a great confluence to sit here and take buys off of, and me seeing that is just adding confluence to why I'm wanting to sit here and buy, and why I wanted to sit here and buy last night. So to continue the 4-hour time frame, I'm nowhere bullish, and I know we broke out this kind of trend line. So I'm going to sit here and transition to my technical analysis time frame, which is my 1-hour time frame. On the 1-hour time frame, you can clearly see these lower highs right here that were formed on the 4-hour time frame. This is our first lower high here. We made another one here. And on the 1-hour, we can see even smaller lower high points formed on these 2 points here. So what to do once you see a breakout of a lower high point? Well, if you're not an experienced trader, then once you have a break of some type of structure point, either a lower high or a higher low point, that lets you know that price is in a transition phase. So once I see this higher low point being, or lower high, sorry, being broken here, I'm already knowing price is about to transition into a bullish type of market. Like I said previously, we have this form of exhaustion shown right here, where price had exhausted on the 4-hour time frame. We had that break of a counter trend line, which is clear as day here on the 1-hour time frame. And now I'm just waiting for price to sit here and find a form of support or a higher low point to sit here and continue the overall uptrend. Saying all I'm waiting for around this area is to sit here and wait for a new support to be found on my 1-hour time frame. Now at 1 a.m. is when we sit here and have this bullish volume close right here, which sit here and gives me that confluence that price did sit here and find a support. Now these black lines that I have pointed, these two right here, they are known as quarter points. Quarter points are just basically when you divide price into 4 sections, and they are psychological areas where people like to sit here and execute trades or leave trades. So when I see price sit here and is finding support around this quarter point right here, this is an added confluence on why I'm sitting here looking for buys around this area. When you're trading, you want to look for as many confluences as you can to sit here and ensure that the odds are in your favor and you are trading with an edge. You know how in gambling, when you go in a casino, most casinos have the edge on the player. And that's the reason why most casinos are successful and they always are winning, because they have that edge. When you're in the market, you want to sit there and allow yourself to have that edge on the market. And when you're sitting here finding confluences such as quarter points and such as support and resistance and such as so many other things, you put the odds in your favor to sit here and end up being on the winning side of things. So let's sit here and continue this breakdown. Now I have that support found. Now I'm on my lower time frames looking for some type of entry opportunity to sit here and take advantage of the move. So right now we are on our 15-minute time frame, and our 15-minute time frame structure is as simple as this. I'm just going to go from this last point here. We had a crazy high there, which ended up coming down to a lower low. We had a lower high formed here, a higher low, higher high, higher low, higher high, and we have a higher low found here, which was our true higher low point within this retracement. This first higher high we found here was a 23.6% retracement, and as you guys know, that's a continuation type of move until we get to this new high here. Once we get this new high, price sits here and comes all the way down here to the first true price reversal zone, which is the 38.2%. So by this time, price had already came down to 38.2%. So, it was like around this time, I'm like thinking, okay, well, maybe we can sit here and form a higher low point from this price to sit here and continue upwards. As so, that's my mindset around this time. That's what I'm thinking. But, the 15-minute time frame gives us a great opportunity to sit here and enter right back at this 38.2% area and right back at this quarter point. So this is exactly where I got my first entry opportunity. Well, not my first, but my main and most profitable entry opportunity. As price was around this zone, I'm like, man, I like this price. I like what I'm seeing around this price. So my main entry was at 155,752. When you're trading Forex, all you're essentially doing is buying a price. That's all you're doing. You're buying a price, and you are putting the odds in your favor to sit here and allow yourself to see some type of profit from the price you enter at. So that price there is the price where I felt very comfortable within entering the market and holding my position. So once we sit here and come back down to that price, the 15-minute respects that 38.2% again, finds a support, little bit of indecision there, and price sits there and continues the overall bullish trend. If you pay attention to the structure around this area, you can kind of see another double bottom type of formation formed around this area, which is once again another bullish confluence. This is nothing but confluence trading I'm doing. So the whole time I'm in this move, I'm feeling great. I'm feeling good. I'm seeing what I want to see. So on this candle close, it closed at 2:45, and I know in 15 minutes the London session um, is opening. The London session is important because I'm trading the GBP JPY, which includes the British pound. So I know at 3 a.m. that's when the British banks are open and that's when their money is moving. So that is why I am paying attention to that 3 a.m. What is happening at 3 a.m. basically. So once 3 a.m. does happen, we have a lot of sellers volume, and that's okay. I'm like, okay, that's okay. London session is just getting started. The people that are just now entering the market are trying to find a way to sit here and get into these type of buys. So I'm not stressed. Price is sitting here coming down, and then we have that major type of bearish volume shown here. But what does it do? It gets exhausted. Me seeing all this seller's exhaustion on this 15-minute time frame is once again another confluence on why I'm holding these buys. Even though price dang near came down and hit my stop loss, I'm not worried because that was all exhausted. And we're during London session, which means bullish volume could be coming to the market, and I'm sticking to my guns and I'm sticking to my bias. Now, as you see here, price was sitting here trying to sit here and test all these price reversal zones. It failed to retest the 23.6%. It failed to test the 38.2%. Failed to test the 50%. And now price closed at the 61.8%, which is considered the golden zone in trading. Once we come off to that golden zone, we have some indecision showing around on this candle, which gives me another confluence that price is indecisive, and it means that that a possible reversal can happen around this price. And what happens? That is exactly what happens as we find a support found here on this bullish candle here with even more seller's exhaustion. And then price sits here and forms that bullish volume we want to see. Now, like I said, yes, my main entry was down here at this 752 area. But this whole time, I'm in and out of moves. I'm taking small wins that are going to compound into that overall $1,250 profit. So, I'm taking small buys on the 1 minute time frame, and I'm letting the move play out. I'm watching it on the 15-minute time frame, waiting for take profits to get hit, and take profits get hit just like that. It's just like that. This is a 5-minute time frame right here. Once we found that support around the 6.8 area, it was nothing but bullish volume. And that's just what happens when you are patient and let the market play out, So, overall, these buys were very smooth. They were very technical based, You have to really understand what is happening around this area. And to me, I just feel like anyone could have caught these buys as long as you understand what was happening on your higher time frame analysis. All smaller time frame moves develop on the lower time frame. And if we zoom back out on our 1 hour time frame, price is doing exactly what we wanted to do, where price is forming that type of bullish structure and it's continuing the overall uptrend. And now I'm out of the move by now. I'm just sitting here and continuing to replay to show you where price ended up. It's only 316 right now, and price was still flying, still going. Price is still flying until we come to present time, and price is heading towards our daily retest area that we had pointed out where I'm anticipating a sell-off of. But all in all, these were the buys that I sat here and took last night on the GBP JPY, which allowed me to sit here and see a total profit of $1,250, as you can see there. And I mean, it was just smooth as butter to me, and it was well worth the wait. But this is really going to be the conclusion of the video, the conclusion of the breakdown. And yeah, I hope you guys really gained some type of insight on just market structure and different type of patterns that you can use in the foreign exchange market. I hope you guys learned on how you can sit here and use time to sit here and add confluence to your overall bias. Me sitting here knowing that, okay, I'm trading within the London session, which is good for the British pound. Lets me know that, okay, buying pressure could be coming to the market, and that allows me to sit here and add confluence to my overall reason why I'm holding the trade. and so many other confluences, you know, I feel like you guys can sit here and take advantage of and really implement them into you guys' trading plans and trading schemes. So enough talking. You know, I appreciate you guys watching this video, like I said, and you know, I'll catch you guys next week. I'm out. Thanks for tuning in.